Hi there. Let us hit the ground running today while we examine common financial analysis that usually will come out in case study. When we are talking about case study, basically we are talking about creating a scenario and using it as a live example of what can happen in business. So in financial analysis under case study now, there are analysis that they could ask, and I'm going to go a bit deeper into every one of them one after the other, starting from comparative financial statements, which majority of us are familiar with. Then we move on to what common size analysis is. Then we examine what trend analysis is, and be careful because there is difference between common size analysis and trend analysis. Then we'll talk about analysis of cash flow or cash flow statements and the change statement of change in working capital or even statement of change in equity. Then we wrap it up with another one that most likely majority of us are familiar with if you are at this point of writing case study: ratio analysis. Having given us the tip of what to expect now, let's dive in. Comparative financial statements. Do you still remember IAS 1 talking about presentation of financial statement? One of the prominent regulation in financial accounting is every financial statement must have a comparative. And the usefulness of comparative analysis is one of these that we are talking about. So it's a technique of financial analysis and is the commonest. Why? Because international financial reporting standard expect every financial statement to have it. So it's the most commonest and is equally easy to use because what it does is to help us visualize side by side what happened last year against what is happening or what has happened this financial year that just ended. So I won't spend much time on that. Then we move on to Before we move on to common size analysis, what are the exception or an exception for comparative financial analysis? I'm waiting. Basically, the exception to the rule of comparative financial analysis is and only if the organization is presenting the financial statements for the first time, that is first year accounts. Common size analysis. Now when we're talking about common size analysis, we make a few of items in the financial statement, particularly the statement of income and or comprehensive income. Also, statement of financial position. We pick some items and make them as reference points to the others. Take for example, we pick from the income statement. Now we want to do common size analysis. We pick sales or revenue. When you pick sales or revenue as your denominator and use it against every other line item. Take for example, we want to know what percentage of sales is our gross profit? What percentage of sales is our cost of sales? When we are doing this, we make the sales the common denominator, and we say we are trying to find the common size of the items in the base, which is our revenue. Simplified, right? So that you won't confuse that with trend analysis when we get there. And don't forget to subscribe to G James Associates. If you are joining us for the first time and you are asking who this is Binka Olatunji FCA. So that is common size analysis. What is the usefulness of common size analysis? It helps us to examine what percentage or the structure of the composition of our financial statements. I think that's a better frame of it. It helps us to know the structure of our financials. Let's take, for example, the cost of sales is becoming a bit higher than what is expected. Definitely is going to affect, should I even say it? What is it going to affect? It's going to affect the common size of the net profit, of the operating profit, of the margin. So it helps us to know the structure, and we can easily and quickly arrest some income lines or expense lines, as the case may be. Let's move on to statement of change in working capital and statement of change or analysis of cash flow. Analysis of cash flow statement. Which one do you really want me to pick first? In fact, we can add another one to this group. Statement of change in working capital, analysis of cash flow, then analysis of change in equity. Okay, let's pick it one after the other. We can be asked and we can analyze changes, variations in working capital. And basically, when we're talking about working capital, many of us know it, but the word working capital can confuse us. When we take our current, total current asset from total current liability, there's a name we do call it, and I will not mention it, so that at least we can use that as assignments. Put it in the comments. So basically, that is the name or alternative name that we are used to when we're talking about working capital. So the differential is what we can say we use for the business operations, which basically could even go negative if care is not taken, and then the organization is not that liquid. Okay, so that is an analysis that we could be asked to conduct. Most easiest of analysis, yet the most complicated for majority of us accountants. Many of us don't even like it when we're talking about cash flow analysis of cash flow statements. So here we need to understand what contribution of our cash flow, or what aspect of our cash generated is going into the finance activity, is going for operating activity, is going for financial or finance activity. So that is why we do have the segments in statement of cash flow. Say those ones that will not affect cash movement, like depreciation and the like. What is their percentage? And majority of those line items which will not affect cash, they are estimates. Then what percentage of our cash generated most or we use in financing the organization? And when we are talking about financial costs, we are talking about those costs that we incur as a result of borrowing from financial institution and the like. So you must be on the lookout for those information in order for you to be able to analyze and prepare analysis of statement of cash flow. Statement of equity too, which is not on the board anyway, but let's discuss it. It's another analysis that could come out in multidisciplinary case study or any of case study that we can imagine. Basically, what are the items that form our equity? Equity belongs to the shareholders. Now we'll be talking about retained earnings. Do you agree as to that? We'll be talking about reserves, unless they are mandatory reserves that we cannot touch, like in the banking industry or financial institution. There are some reserves that, even though it's for the organization, the equitors, yeah, the shareholders do not have a say over it. Okay, then we'll be talking about our current profits that we are adding to the retained earnings is part of equity. And we will be talking about the share capital itself that the equitors or the shareholders actually gave for us to run the organization. The share premium is part of equity. So all these comprise what we called equity. So when you are to analyze for equity and changes in equity, these are the items you must look for in the financial statement that you will be handed over, or that will be handed over to you. So that's in brief. Moving on now to trend analysis. Don't forget, at the beginning I said there are differences, a major difference between common sense analysis and trend analysis. Now when we are talking about trend analysis, we are talking about using a year as a base, then using it to know the performance of the organization. How have we performed in the past maybe 2, 3, 4 years? And we can use it at the end of the day to make a projection. Like organizations that are publicly listed are mandated to project into the future what their performance will be. So we can follow the trend we add to project what most likely our performance will be. So in trend analysis, we make a year the base, and every item in the financial statement of that particular year we turn automatically to the base, that is 100%. Then we use it against other years. Last but not the least, because I will not want this video to be too long, is the ratio analysis. Ratio analysis is a common analysis that we do in case study and in finance. And when we're talking about this is more elaborate, and many times it comes out usually, because it's the investors or the investing world actually love so much ratio analysis. Then we will now be talking about the PE ratio, the return on investment, return on capital. Can you name it? Acid test, gearing ratios. The list is actually endless, because inside all these ones too, we can still have sub depending on the denominator and the numerator. And this is another thing, important thing that I want to point your attention to. Please note when you are writing a case study on your exams. Don't just say because you know what the formula for PE ratio is. And by the way, all these formulas I had earlier done them on James Associates. Please, you can look for ratio analysis lectures. We are not going, this is not the purpose for this video. Your numerator, your denominator clearly state. That's the point I want to make. Because you can do PE ratio, I can do PE ratio for the same organization, we can have different answers by reason of what I use or what I did not use to make up some figures, and even any ratios at all. So when you use what you use, put it, let's say for example, we want to talk about PE ratio, price earning. The earning that you use, we want to know what is the composition of it. If it's net, say it is net. The price, the market price of the share, please state it, and at what date. Be very careful, because if they try to confuse you using maybe two different dates, the examiner will actually expect you to use the one that is ending as at the year end of the case scenario. So that is where I'm trying to point your attention to it, that make it clear that this is the formula that I use for this ratio, and that is why I'm getting what I'm getting. If you do not do it and the marker use or think of standard ratio, that is the numerator and the denominator, to use it to mark your scripts, I hope you will not experience it. I don't want to go that line, because I'm here to encourage you. You understand? So this is Benga Latanji FCA from James Associate that I've been speaking to you. Don't forget to like, don't forget to comment, don't forget to subscribe, don't forget to share. Tell a friend to tell a friend. We have value to life. We have value to your businesses.